unanswered by our experts. You can keep sending in your queries on the number that's flashing on top of the screen, your stock price, your buying price, your question, and your holding period, and we'll get them answered by our experts. But first up, let's take stock of how the market is shaping up. Ashesha, this was largely penciled in, the jitters that the global market is suffering on account of the tensions that's been brewing in the Middle East and escalating prices of oil. That is weighing on the market, even though at this point we are managing to recover from the lowest point of the day. Nifty has recovered 85 odd points, and Nifty Bank has also managed to recover 130 odd points from today's lows.
Well, yes, we have recovered from the lowest point of the day, but despite that, a weak start for the Indian markets. Nifty is now down nearly 200 points below that 25,000 mark. Nifty Bank on the flip side is also down 0.6% in today's trading session. 55,911 is where the Nifty Bank is currently trading. In terms of individual sectors, we have IT sector, which is impacted the most. Globally exposed sectors are likely to be impacted the most in today's trading session. Nifty IT index is down nearly 1.5% in today's trading session. Infosys at the top of that list, the biggest loser on the Nifty 50 index as well. Infosys is down over 2.3% in trade today. HCL Tech, Oracle Financial Services, TCS, Wipro, Mphasis, all of them declining anywhere between 1 to 2.5% in today's trading session. We have Auto Index, which is also down nearly 1%. And we have individual stocks, the likes of Motherson Sumi, which is down nearly 3%, followed by Bosch, M&M, Hero MotoCorp, TVS Motor, all of them declining in excess of 1% in today's trading session. So Ankita, all in all, we have recovered from the lowest point of the day, but despite that, reeling under pressure in line with what the global markets were suggesting.
Absolutely, Ashesha. And without further ado, let's get on board our guests as well. Kunal Bothra joining us on the technicals, and Gaurang Shah, Senior Vice President, Geojit Investments. Hi, good morning to both of you, and thank you so much for joining us. Before we start taking the questions and start getting them answered by you both, let me get your take or your sense on the market. Of course, we were penciling in a weak start for the market, as there is jitter about the tension that's going on. But really, we have been, Kunal, let me come to you first on this. We have been pretty range bound even otherwise. We had seen some move coming in last week, but we have been largely within a tight range as far as the index is concerned. From here on, how do you see that moving now?
Well, yeah, I think good morning. It's a very steady kind of a market, I would say, because 100 point to 100 point down for the index after such kind of severe negative news flows going across the geopolitics. I would believe that that's a sign of a very sturdy market as such. What matters over here is now important technical levels. Now we are looking at a point where 25,200 has been tested almost 4 or 5 times in the last 3 to 4 weeks. And the downside, I think 24,850 forms a major pivot point. I think intraday also we managed to bounce back from that 24,850 mark on the spot levels. And from there we've seen this 60-70 point recovery for the index. And on the major support side, 24,500 is a critical support for the index. So I think these are the ranges which one has to play out for. This is going to be a tough week for the markets, because I think traders will also have to grapple towards the June expiry series for the index. But I believe in that sense, I would probably expect the markets to just about dabble into this trading range and the key levels which I just mentioned.
Okay, so those are some of the crucial levels to watch out for, but let's get started with all your stock specific queries. You can keep sending them to us. We already have our guest in the studio to answer all your queries. And the first question has come in from Anshul Sachdeva. He wants a view on GMDC. He's holding about 200 shares at the price of 420 rupees per share. And Z Entertainment, 200 shares at the rate of 139 rupees per share. He has not mentioned his time horizon, but Kunal, what will your view be on Z Entertainment and GMDC?
See, I think GMDC, I would believe it's a classical stock, and I think a dip of 5%, 10% broadly is considered to be a good buying opportunity for the stock. There are multiple positives which have happened for GMDC, a golden crossover where the 50 DMA has crossed about the 200 moving average. The recovery the stock has seen from 250 levels to now just about 400 levels where it's trading right now. I think it's been nothing short of spectacular in terms of price trends. I would believe that GMDC is a very good structural buy, and the chart structures are extremely positive. I would suggest a buy on the stock. Just one caveat is that both Z as well as GMDC are very high beta stocks, so you have to be at one point of time ready for a 10-15% kind of swing in terms of the stock price movement. But I think both of these charts are very attractive at current levels. I would suggest a go ahead as well as a buy on both of these names.
All right, so that's the take coming in by Kunal and Z and GMDC. But coming to you, Gaurang, this is Swati who's writing in. She wants to know about two stocks. One is Hero Motor and Tata Tech. How do these two counters look to you?
Thank you so much for having me on the show. Good morning to you, to my good friend Kunal, and all the viewers of it now. Well, before I give any comments, all the recommendations related ideas are from our research team. Our company, Geojit or I, we do not have any investment interest or financial interest or any other kind of conflict of interest, but we give similar recommendations to our clients. They might have their investment related interest in the stocks that will be recommended. So firstly, on Hero MotoCorp, well, this is one stock when you compare with Bajaj Auto, TVS Motors, or as a matter of fact, Eicher Motors because of Royal Enfield motorcycle. This was an underperformer, but the performance has started to catch up over the last at least 3 to 6 months, primarily because of the comments from the management in terms of business in the future, and of course with respect to new launches. So our fundamental team has a buy recommendation on Hero MotoCorp. Targets approximately stands close to about 4,850 plus kind of levels from here. So it's a good risk reward kind of a ratio. On Tata Tech, well, this was one company when the IPO came. I think the IPO was somewhere close to about 685 or 700, if my memory serves me right. And we had recommended subscribe to the IPO of Tata Tech from a long-term point of view. And given the current levels where the stock is trading, of course, after listing, it went to 1400 and now it has almost retraced 50%. 700 is the level where the stock is trading. So keeping that IPO note as a base of the recommendation, you can stay invested from a long-term point of view.
Stay invested from a long-term point of view. That's the word coming in on Tata Technology. But we have a question from Bangalore. SK Saran has written to us. This question is for Kunal. He's asking for a fair price to purchase Cyient Limited. What will your view be on Cyient, this IT company?
See, I think at current levels, in fact, over the last couple of days, I've been mentioning that close to the 1300 mark, 1290 has been a good support for Cyient. And you can look to start accumulating the stock at current levels. It just looks like that maybe the stock is taking a pause at this 50 DMA, where the volumes have started to increase or inch up slightly higher for Cyient. So there is a very strong case which one could build that maybe the stock over the short term is trying to just about establish a strong support territory at the sub 1400 levels. I would suggest to start accumulating at current levels. And generally these are the kind of stocks which you should add on once the breakout gets confirmed. So good risk reward at current levels you can start entering, but the higher quantity is what you can buy once the stock confirms a breakout above 1400 levels.
All right, that's the view coming in on Cyient Limited. But with that, it's time for a quick breather. Don't go anywhere. After the break, we'll take your questions and get them answered. So stay tuned.
At 949 rupees per share. He is incurring a small amount of loss and asking whether the viewer should sell out of this position and instead buy HDFC Bank. Gaurang, what will your view be? LIC versus HDFC Bank?
So this is like, I'm caught between the devil and the deep blue sea, to be very honest. I do agree that LIC was an underperformer since the time it got listed. There was a prolonged period of underperformance, but then the stock started to perform. It went up to, I think, 1000, 1050, and then it has again retraced, and now it is very close to where the acquisition price was. So point number one, the research team has a recommendation on buy side for LIC. Targets are nothing very big, somewhere close to about 1000 plus is the target given the kind of earnings that have been delivered. In case if the future earnings improve, then the targets get revised accordingly. So from a long-term point of view, we have a buy recommendation. The question whether the investor should shift from LIC to HDFC Bank. Now on HDFC Bank, again, we have a positive recommendation, and I think the earnings have improved for all the good reasons, and most likely the banking and finance, BFSI segment is likely to do well, within which HDFC is likely to have a buy recommendation. Like I mentioned, target is somewhere close to about 2200. Now I would leave it to the wisdom of the investor, because I can't be biased towards either of them since we have coverage on both.
All right. So there is a coverage on buy call on both HDFC Bank and LIC. But coming to you, Kunal, then this is Coach Dada who's writing in. He's holding 6,500 shares. Okay. He's not written the stock name here, but okay, let me come to this query then. This is S. Kumar who's writing from Chennai. He said he would like to pick any one bank between Bank of Baroda, Canara Bank or Bank of Maharashtra. Can you help pick one for the next 6-9 months?
So I think out of the three names which you mentioned, Canara Bank so far looks to be a better name on the charts. There seems to be a point where Canara Bank has been an outperformer. And I think at current levels of 106, 107, there's been a dividend factored in of 4 rupees approximately for Canara Bank. So I think looking at the aspect, the short-term charts, out of the three names, I would probably pick Canara Bank as a slight better candidate in terms of momentum. If in case you are looking out for private sector banking names and for differentiated stocks, other than what you've asked for, I would also recommend to have a look at Federal Bank, RBL Bank as well as Bandhan Bank. I think the chart structures for these stocks are also becoming extremely positive and attractive.
Okay, so that's the view coming in on several of these private and public sector banks. But Ghosh Dada has written to us from Delhi. He is holding about 6,500 shares of Mishra Dhatu, or Midhani as we call it, at an average price of 420 rupees per share. He is asking whether he should buy more. Gaurang, what will your view be on Midhani?
So again, it's a defense-related play, and defense sector is something that our research team is positive on. We have certain recommendations on defense-related team. Unfortunately, on Midhani or Mishra Dhatu, we don't have any specific recommendations. So it's not a buy, sell and hold recommendation. But let me say this. It operates in a very niche segment, that is titanium alloys and special alloys, which has a direct correlation to defense as well as space-related vehicles that are being made. Order book is very strong, and equally strong is the performance in terms of earnings. Since we don't have a clear-cut recommendation, I am not in a position to give a buy, sell.
All right. Okay. All right. Moving on then from that, coming to you, Kunal. This is Satya who's writing from Hyderabad. He wants to know about technical advice and the right entry price for two shares. One is BEML and the other one is HAL for a period of the next 1 year. What's your outlook for BEML and HAL?
See, of course, I think as Gaurang was rightly explaining that defense stocks overall have been looking fairly attractive. They continue to be attractive at current levels. And, it's very difficult to choose just one or two names from the entire defense pack, because when they move in tandem, these stocks, they tend to outperform, or they have an internal competition as such amongst themselves. So that, I believe, could be a zone where I believe that the more you are exposed towards the defense names, and then the more you try and accumulate these stocks, especially on corrections, I think that's the strategy to try and have captured the advantage on the upside for many of these defense stocks. I would believe both of these names, BEML as well as Hindustan Aeronautics, I think both these chart structures are extremely positive. Now, the concern for these stocks would emerge at the entry point, because you're not entering at a point where the stocks are at oversold territories or into a corrective phase. So in this kind of a scenario, it's better that you start entering smaller quantities at current levels. And these stocks have a tendency of giving you those odd phases of correction every now and then. Try and use the corrections to accumulate further into these stocks.
Okay, so that's the view coming in on several of these defense stocks. In fact, we have one more question that has come in on Bharat Dynamics from the same sector, and this is the viewer is asking a technical view. Sri has written to us from Bangalore. Now, this viewer is holding about 200 shares of Bharat Dynamics at an average price of 1,800 rupees per share. The stock currently at 1925. Kunal, what will your view be?
Yeah, again, an attractive chart, and especially with the fact that the stock has broken its 2024 highs. That was around 1800 mark for Bharat Dynamics. The stock has crossed those levels. 2100 thereabouts was the high for the stock in the recent past, and from there you've seen a mild correction. So that's clearly an indication that the stock is looking extremely attractive on the longer term basis. And looking at the chart structures, the recent breakout, the stock has shown the exceptional volumes this quarter so far for the stock price compared to the last 3 or 4 quarters, indicates that the momentum is here to stay as well as sustain. I would suggest a buy at current levels, and as I just mentioned earlier, that it's better that you have a buy and dips kind of strategy for these kind of themes as well as names which have a good chart structure which could emerge very well for themselves over the next 12 to 18 months.
Right. All right. Coming to you, Gaurang. But Gaurang, before I ask you the next talk question, just a question on this entire defense pack. Now, while the defense pack has been in the focus because of the rising geopolitical tensions, they have already run up so much. There are still orders with these companies, but is there a valuation comfort though?
Well, so, from an immediate short to medium term point of view, if you ask us, some stocks look a little bit stretched, most of them rather, in terms of what they've delivered in form of earnings and what they are likely to do. But, as I have mentioned earlier on ET Now as well as on your sister channel ET Now Swadesh, that if you eventually decide to invest in defense related companies, then don't invest in defense from a short term or a medium term point of view. Invest in defense related companies with a time horizon of 3 to 5 years. If you really want to see your investment grow to a meaningful level, and the reason for why I say this is because these companies are involved in making very high precision, high technology oriented kind of equipments. It is not like they get an order this morning and tomorrow morning they start delivering in terms of mass scale production. They are very complex projects and they take time for the order book to get executed from a prototype to the prototype getting approved and then the mass scale production. So from a long term point of view, there is a lot that needs to be achieved in terms of order book, not only for the domestic market, but also for the export related order book. And along with that, the kind of growth prospects and earnings visibility that these companies have. So short to medium term, maybe there is a little bit of rich valuation, but with a long term point of view, like I mentioned, 3 years, 5 years, I think there is a lot that will come in terms of order book, and there is a lot improvement in terms of earning visibility also.
So that's the view coming in on several of these defense stocks. We got a fundamental and a technical view on several of these stocks. But shifting focus to the IT sector then, Venkata Rao has written to us from Vishakhapatnam. He has a question on Infosys. He is holding about 110 shares at 1818 rupees per share. 1818 is his purchase price. Question is for Kunal. At what price can he average out of this position? So Infosys, what will your view be on this IT major?
See, I think at current levels, I would suggest to average out further for Infosys. Maybe not exactly at current levels, but just another 10 points on the downside, closer to 1575 on the spot levels. I think would be a good point because that would also coincide with the 50 DMA for Infosys. Over the last few weeks, we've been highlighting that how many of these IT stocks are starting to look attractive in terms of risk reward, and especially from their individual breakout points. Infosys has moved up higher significantly from those breakout levels, but now that the stock is retracing back again, I think trying to take advantage over here could be a good strategy so that you can bring your average price lower of your existing holdings for Infosys. I would suggest an average out, say closer to 1575, which is 10-15 points low from current price.
Alright, point taken, Kunal. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back with your questions answered on the other side.
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है?
More at this current juncture.
So, the problem immediately from a short to medium term point of view, as far as tire manufacturing companies are concerned, is the dependency on crude oil, because that is one of the large input cost, and the fears that are lingering currently with respect to Iran possibly putting complete restrictions on Strait of Hormuz, where approximately 20% of world global supply passes through the Strait of Hormuz. Of course, India's dependency, which was about a couple of years back, has gone down drastically in terms of securing India's energy requirement in form of crude oil and natural gas. It's more now looking at US and Russia for its energy requirement. So any kind of spike up in crude oil prices because of this current situation, geopolitical, could lead to short-term, medium-term input cost increase for tire manufacturing companies, which may translate into some kind of squeeze in the bottom line in case if the prices are not passed on to the end consumer. But to give a recommendation, well, we have a hold recommendation on Apollo tires. In case if you want to average, just keep one thing in mind that you need, if you average, you need to be, approaching a methodology. Don't average 100% of whatever you hold with short price difference. Wait for the stock to correct to maybe 5 or 10%. And if you get that kind of correction, average some quantity, maybe about 25 or 30%, whatever, capital you want to invest, that portion should be put in. And of course, you should do this in a systematic manner. Hold on. And like I mentioned, be disciplined in terms of averaging. Don't average unless you get that 5-10% correction. And if you get that, don't average 100%, average 25-30% depending upon your risk appetite.
Okay, so that's the fundamental view coming in on Apollo Tyre. But the next question is also for you, Gaurang. Professor Thomas George has written to us from Cochin. He is holding 500 shares of Praj Industries at an average price of 500. He's asking what should he do with this position? Your view on Praj Industries as a company, and fundamentally, is it a sound company to hold on to?
There is no standout coverage on Praj Industries in terms of buy, sell and hold, so I won't give any specific. But what I've noticed in terms of the price performance, well, this company is one of the niche players as far as the ethanol story is concerned. But over the last 6 to 8 months, it has been consistently on the downside. Maybe that is because of certain earnings related negativities or inability to scale up the operation. Again, since we don't have a coverage, I won't be in a position to give a buy, sell and hold.
Coming to you, Kunal, then this is Raja Shekhar who's writing in. He has 600 shares of Varun Beverages. He's bought it at a price of 58 rupees. He wants to know your view on for the medium term. Now, Varun Beverage, in fact, he's sitting at quite a bit of a profit if he's bought it at 52. What should he do? Should he wait for the stock to move up more? Should he book out? Because Varun Beverages has been in a corrective phase, right? And what should he be doing right now?
Yeah, it's been in a corrective phase, and the last 2 months the stock has corrected almost 10-12% broadly. So I think from 550 levels it's corrected towards 460, 465 where the stock is trading right now. I think it's a stock which is forming a bottom on the charts. I think a couple of days back also I had flagged off VBL in the show because my expectation was that the stock is now nearing a double test of a previous major support levels, and typically these are the kind of support levels the stock adheres towards and goes into a process of a bounce. So I maintain that stance on VBL, Varun Beverages at current levels, and expecting the stock to gradually move towards 500 to even 525 plus mark if it's a short term kind of a time frame.
Okay, so that's the view coming in on Varun Beverages. We have Ignatius who has written to us from Kolkata, and his question is on Trent. He bought about 20 stocks of Trent at an average price of 6,434. He has been holding on for nearly 6 months now. He's asking whether he can average out at this level. Kunal, what will your view be on Trent? 6,044 is where the stock is currently trading.
Yeah, I think at current levels, you can look to average further for Trent. I think the stock is nearing a breakout. I was looking at the charts for the last couple of days also for Trent, and the stock was nearing 5,700, 5,800 as a breakout point. And today the stock has crossed the levels of 6,000 plus mark. So which means that the build-up which was happening over the last couple of days for Trent was indicative of the stock breaking out. That breakout has happened today. I would suggest a buy on the stock, and looking at this momentum breakout, you can expect another swift, say 300 to 500 points on the upside. Of course, the caveat could be if the markets also, just about continues to remain into a slight positive territory and doesn't react too much on the negative side, especially with the geopolitical news flow.
All right, so that's the view coming in on Trent. Gaurang, let me come to you. Priyanka Rao writing in from Hyderabad. She wants an advice on Persistent Systems. She's bought 110 shares at a buying price of 5,992 rupees, and she's currently sitting at a loss. She wants to know what should she be doing with the stock. Should she be averaging in, or how do you see this stock, this particular counter panning out?
Well, this is a sad situation because we used to cover Persistent Systems till about last month, that is in the month of May. Currently, we have removed the coverage since there is some review, I believe, that is going on. So we don't have a coverage specifically on persistent right now. But let me give an insight about Indian IT sector and more importantly, the mid-cap IT universe. So, when we do comparison over the last couple of years on earnings front and capability of delivering on return on investments. So there have been times, multiple times, that some of the mid-cap IT companies have done extremely well. In that, of course, Persistent System is there. You have companies like Science Limited, Coforge, uh, KPIT Tech, Tata LXI, to name a few. So, and of course, the current situation with respect to US attacking Iran, and if the situation has to go out of control, and if it's a prolonged kind of geopolitical situation that we have to handle, then that will reflect upon the US economy. Along with that, we have tariff-related issues currently. Possibly it will get sorted out in first week of July. That's when President Trump has spoken about the 90-day window period ending. Mid to short term, IT sector could go through a lot of turbulence, but long term, as a sector, we are positive, and we have coverage on large cap, mid cap, and small cap IT. No specific comments on Persistent since the coverage is not the right.
View on IT and several stocks that we discussed. Let's shift focus to the oil marketing companies then, and many of them have already been in focus on account of the surge in oil prices that we are seeing in the global market. Oil marketing companies, the likes of BPCL, IOCL, HPCL. But we have a question that has come in from Tina. Now she is holding about 230 shares of BPCL at an average price of 355 rupees per share. The stock currently at 311, which means she is making some amount of losses. She is asking, for the next 12 months, what should the strategy be? Should she hold on to the position or sell out? Kunal, what will your view be on BPCL?
See, I would suggest to hold on to the positions. I think the OMC pack overall has been showing a lot of maturity, resilience at current levels, especially with the crude oil prices spike in the last 3 to 4 weeks. Look at it this way: we were almost at $65 or maybe below that on the Brent crude, and now we are almost nudging the 78 to 80 kind of a resistance band for the Brent crude. So even in that kind of a phase, we've not seen a major sell-off happening into the OMC pack, and they've been a lot more resilient at current levels. I would suggest to hold on to the stock, and whenever the crude oil prices starts to ebb off, it could be a matter of weeks, days, months, difficult to guess. But then I think whenever that happens, you can probably expect the OMC pack to get back into a second round of an uptrend as well as a strong trending up move.
All right, with that, we're completely timed out in this edition of Buy and Sell. Now, Kunal and Gaurang, thank you so much for taking the time out and joining us on this show. And well, with that, it's time for us to slip in a short break. Don't go anywhere. We'll be right back.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.